Hello, my name is Ellie Terry, and I've been helping guaranteed income pilot programs for many years understand the interaction between guaranteed income, structured as gift income, and the receipt of public assistance programs and tax credits. A goal of guaranteed income programs is to increase the financial resources of the household, which will theoretically stabilize them. But a barrier to increasing financial resources through receipt of guaranteed income is that participants may lose government assistance as a result. This happens because many social safety net programs phase out or end suddenly as income increases. Counting guaranteed income as income may trigger a partial or complete loss of a family's public assistance receipts. This graph shows how three programs, housing voucher, child care subsidy, and SNAP, phase out with income gains for a family of one adult and one 2-year-old. If a family is sitting just below the poverty line at about $16,000 per year, and they receive $500 per month in guaranteed income, then they stand to lose about $295 a month in benefits, offsetting much of the amount gained through guaranteed income. This chart is going to be very different for every family in the US, and it's going to depend on their housing expenses, their childcare expenses, how many people are in the house, where they live, and what programs they receive. And this is just not easy for people to figure out. So what we have is an information problem. Participants and guaranteed income program designers alike don't know what programs are affected by the receipt of guaranteed income, because when guaranteed income is structured as gift income, it counts as income towards some, but not all of the government assistance programs. Participants and program designers also don't know how the value of these programs change with the receipt of guaranteed income. And the calculations to determine this are very complicated. But we have a solution. The hero here is going to be a huge calculator that relies on the policy rules database developed jointly by the Federal Reserve Bank of Atlanta and the National Center for Children in Poverty. Myself and two other people spent 2 years developing the initial policy rules database, and now there is a whole team dedicated to improving and updating it. You can read all about the policy rules database on the Atlanta Fed's website. But in short, it provides the eligibility rules for all major federal and state public assistance programs and tax credits, including how guaranteed income, if structured as gift income, will be counted by each program. The policy rules database is the engine behind the user-friendly tool that you will all be using to help individuals understand how guaranteed income might affect their benefits. This tool is called the Benefits Loss Calculator. The benefits loss calculator shows which programs are affected by guaranteed income and the extent to which they are affected. The tool then calculates the net value of guaranteed income after the loss of government assistance is taken into account. To access the calculator, you can navigate to the link you see here and click on the Calculate Benefits Loss tab. Now, the best way to learn how to use the benefits loss calculator is through examples. First, we'll examine the case of Isabella. Isabella is separated from her child's father and can no longer rely on him for much financial support. She is relying on public assistance so she can afford basic expenses for herself and her child during this transition. She has been selected for a guaranteed income program offering $500 a month and wants to know how her benefits will be affected if she enrolls. The benefits loss calculator can be used to get an idea of what public assistance she may lose if she enrolls in the program. While it cannot make official determinations, it can provide her an idea of what is likely to occur. This is a screenshot of the tool. Note that it is designed to ask the bare minimum amount of questions necessary. To accomplish this, the questions asked in the tool will vary by household type, and many questions appear as you answer other questions. For example, if you type 2 children, it will ask the age of each child. The tool starts by gathering information about the household, including location, household composition, household income, and amount of guaranteed income. If the person has other sources of income besides the monthly earned income, click Yes next to other income and answer the questions that appear. Scrolling down on the tool, you will see more questions to fill in. You will need to select the public assistance the person is receiving, enter their housing and childcare costs if prompted, and enter both the current assets and the maximum amount of assets they might accumulate given their increase in income. You need to enter anticipated assets because some programs have asset tests. And note that assets are the amount of money in checking and savings accounts, excluding retirement accounts. You will note that for this example, I chose Head Start, SNAP, Child Tax Credit, and CHIP, but the full list of potential programs to choose from is much longer. The list on the right shows all of the programs and tax credits included in the benefits loss calculator. If a person is receiving something not on this list, you will not be able to calculate benefit loss for that program. After you fill all the information on the left-hand side of the tool end, you can click on Calculate Results at the top of the page, and the results will show a bottom line number with the effect of guaranteed income on the household budget, and 2 tables explaining this number in more detail. In this case, the person's budget will increase by $84 a month. Table 1 shows where that number comes from. The person's take-home pay increases by $500, but they lose $416 in public assistance, resulting in an $85 net gain. Let's briefly walk through this table in more detail. Take-home pay is after-tax wage income for the entire household, including all sources of income. Public assistance includes the total value of public assistance programs and tax credits. Living expenses includes the unsubsidized cost of housing, food, childcare, a smartphone plan, and miscellaneous expenses. Expenses provide you with an idea of how much is necessary to afford a basic standard of living. However, you should not focus on these numbers. They will not help you interpret the results. The second table shows the impact on each of the public assistance and tax credits the person selected. It also shows the impact on income taxes. The calculator shows the estimated value of each program the person is receiving and how much that value of each program is estimated to change by if they receive guaranteed income. Note that some benefits are unaffected, including CHIP and the child tax credit. For this individual, the only benefit that is affected is SNAP, and it declines in value by $416 per month. SNAP, Medicaid, Section 8, and CCDF all have different eligibility requirements for households where one or more members has a disability. In some states, children with disabilities may be subject to different rules for the CCDF program, and these state-specific rules are not incorporated. Further, SSI and SSDI are programs specifically designed for persons with disabilities. It's important to note here that extra caution should be taken when persons are receiving SSI and SSDI. SSI and SSDI can be very difficult to get back, and recipients are often very reliant on such programs to maintain their financial stability. For this reason, it's very important for recipients of SSI and SSDI to double check with case managers or representatives from the agency administering these programs before changing their income. For this example, we will use Clarence. Clarence is 55 years old and is legally blind. He currently makes $800 per month. He wants to enroll in a guaranteed income program offering $1,000 per month, but he is worried about losing his government assistance supports. He knows that SSDI in particular was very difficult and time-consuming to obtain. If he loses access to that program, it could put him in a very financially vulnerable state. First, I enter Clarence's household characteristics and sources of income, including guaranteed income. Then I select public assistance that Clarence is receiving, the amount of SSDI he's receiving, housing and childcare costs, and assets. Next, I hit Calculate Results at the top of the page, or Recalculate to update tables based on prior information I entered. The results show that Clarence's budget will increase by $538 per month. He gets $1,000 more in take-home pay due to the guaranteed income, but he loses about $462 in public assistance. Specifically, the calculator says he is likely to lose the entirety of his SNAP benefits, valued at $166, and his SSI income, valued at $296. While his SSDI should not be affected due to gift income not being counted by this program, this is a very difficult program to get back, and Clarence should be encouraged to reach out to representatives from the Work Incentives and Planning Assistance Program. The hotline phone number differs by state, but it can be found with a quick Google search. There are a few limitations of the calculator that are important to be aware of. And don't worry about memorizing these. They're listed on the main page of the calculator for easy reference. First, the benefits loss calculator does not show official eligibility determinations. The tool estimates eligibility and the value of public assistance programs based on income, assets, and household composition. It does not include other eligibility criteria. You should confirm any amount shown on the calculator with your case manager or representative from the agency you are receiving benefits from. Second, not all government assistance programs are included in the calculations. For example, the following are not included: non-MAGI Medicaid programs, LIHEAP, FAFSA student aid, city-run programs, just Metro, and water discounts. Further, the calculations are for a snapshot in time. Any changes to your household characteristics, such as income, assets, and children's ages, will likely affect the results shown. Program rules also change with time. Special program rules for current or formerly incarcerated individuals, veterans, pregnant women, non-US citizens, children currently in or exiting foster care, and persons experiencing homelessness are not included in the calculations. Again, these limitations are displayed on the tool for easy reference. Well, that wraps up our training on the benefits loss calculator. I hope you have learned something, and I wish you the best of luck with your guaranteed income pilot. If you need a customized dashboard or personalized training for your pilot, please don't hesitate to reach out.